We are sitting here on a ticking time bomb, are looking extremely bullish. The ETF inflows were 1,500 Bitcoins. So just wait and see here a little bit. CPI came out lower than expected, but the FOMC meeting spoiled the party for us. We were pumping really nice to the upside, and now there's only one chart that we need to look at to know where we are heading next. Let me directly show you what I'm talking about. Let's go, guys. When we're looking right now at the Bitcoin chart, then what you can obviously see is that we pumped here massively yesterday to the upside. We cleared a lot of the imbalances and the fair value gaps that we had here on this 4-hourly chart, all the way to the upside to $70,000 approximately. Got from there a big rejection straight back to the downside, and since then consolidating a little bit. I was hoping the whole day that around the fair value gap down here of 67,680 and 67,890, that around there we find support, and it looks like that we do for the time being. And also the upward sloping trend line is again showing us that this is the support line that we need to be watching right now. But this is not the chart that I want to show you that is the most important here. Just give me a little bit, watch the video till the end, and you're gonna find out what I'm talking about. Yesterday, during the FOMC, let me put it this way. Yesterday when CPI came out, the whole market turned bullish. We got this giga pump of $2,000 to the upside. We would have continued to pump if Jerome Powell would have been not so hawkish during his speech yesterday. And at the same time happened something else that massively impacted the markets. After Jerome Powell was done with his hawkish speech and we saw this big retracement to the downside, at the same time, Saudi Arabia came out and said something that a lot of people were already speculating on, that they are not renewing the Pedro Dollar agreement with the United States, and that they are going now to trade oil in multi-currencies, including the Chinese yen, the Japanese yen, whatever that is, euros, yuan, because Chinese RMB is something different, ruble, instead of exclusively in the dollar. So now that creates a lot of problems politically for the US. A lot of things will get more expensive because the US economy was depending partially on the petrodollar agreement for their own economy. Hence, why we're going to feel that impact later on in pricing in certain products. So that means even if inflation would come down, potentially the prices will stay the same because the US has no exclusive agreement anymore with Saudi Arabia in terms of pricing the petrodollar only, their oil only in the petrodollar. When we're going then here to our FOMC chart on Bitcoin, we can clearly see that nothing really crazy happened yesterday if you zoom out a little bit. And let me explain you what I mean by that. Here on the FOMC meeting in January or early February, we got also a pump. We got a small retracement over a couple of days when the market digested the information and then went to the upside. The same here also. This here is the nearest experience of the current FOMC meeting that we are seeing, because here also we pumped into FOMC, and during FOMC, then we got a retracement over 2 days, and then we pumped again to the upside. That is an outlier here. We technically also pumped into FOMC, got a little bit more extended digestion of what happened, and then a push to the upside. So now we're again in this digesting phase of the market to digest the information that we got yesterday during FOMC, and the outlook in general is not bad for the market. So what happened yesterday was that during the FOMC meeting, it was stated that the rates stay the same. So that is, of course, something bullish in the short term for us. because inflation is coming down. But Jerome Powell said instead of 2 rate cuts, we only get 1 this year. The second rate cut would have been anyway only in December. So, and the first one is planned for September. If we get one in September, all hell will break loose, and we're gonna get a God candle-like breakout, in my opinion, no matter where the Bitcoin price is at that time and moment. But that we don't get one in December is not really bad. And once the market is understanding this, that we get at least 1 rate cut, and that was yesterday confirmed, the market will react to that in the next 48 hours, in my opinion, and we're going to see a massive move to the upside. So just wait and see here a little bit where we are chopping around between $67,700 and the $68,400 level for the time being. You're gonna see we're gonna get our pump here in around the weekend, basically. So just a little bit more patience. Something else that I observed yesterday was the dollar index related to the FOMC meeting. When the CPI data came out, the dollar lost strength and broke to the downside. And then during the FOMC conference, the speech of Jerome Powell and the announcement that there will be no petrodollar, the dollar gained in strength again. And now let me explain you why this actually happened. Because people started to be risk on in terms of risk on assets when CPI came out, because the whole market interpreted that at something really, really bullish because it came lower than expected. So people were like, okay, risk on, we move from the dollar into risk on assets, let's gamble a little bit. So that was the mentality yesterday until the speech of Jerome Powell and the announcement, no petrodollar. Once that announcement came out, people were like, oh shit, this is not the moment to be in risk on assets. We don't know what's going to happen now because of the petrodollar. The economy is here right now in danger. So we should get back into the dollar out of the risk on assets. So, and that's why you saw here that whipsaw move in the dollar index. And now we are scratching here at that resistance of 100, almost 105 points on the dollar index. I, for now, don't believe that we are going to break through that. Looks more like that we are trying to get here rejected to the downside. If that is confirmed here in this current 4-hourly candle, that we are getting here a doji, so it almost looks like that we're trying to form a doji candle here. That will be an evening star pattern. If we continue to move here to the downside, reversal pattern, we go lower, risk on assets will then go higher. So because the dollar is fighting here a little bit with that resistance right now, we see Bitcoin moving slightly to the upside. We were a little bit more bearish earlier, but this seems to potentially reverse here already. Like I said, people needed to sleep over it, to digest the information. They are starting to waking up to the fact that we get at least 1 rate cut, and you will see then this also reflecting in the markets. Something else that was yesterday really, really positive was that the ETF inflows were 1,500 Bitcoins positive of inflow. That is another bullish indication that institutions are getting back on the horse to bet on Bitcoin and accumulate more at discounted prices. So I guess they woke up and thought, okay, as long as Bitcoin is under $70,000, we need to scoop up as much as possible. And I believe these buys here were panic buys. So they saw CPI and were like, oh shit, we need to buy more now before it goes to the moon. So I think we're going to see another positive day of inflows today. Tomorrow might be different, but today should be also positive. And again, guys, I promised you, I showed you the chart that is the most important to watch here right now. I actually just showed it to you, forgot to mention it. So the dollar index chart is the chart that you need to watch here. If we are not breaking the 105 point level, then you know risk on assets will do well. If we break above that, the 105 point level, you should for now sit on your hands. So just watch that on the daily chart. I watched it here now on the 4-hourly chart. On the daily chart, you don't want to see the current candle breaking above that, and you want to see tomorrow's candle getting rejected to the downside. So that's how I'm going to play this right now, relying on the dollar index chart. When we're going then into the Bitcoin chart, here also, if you zoom out a little bit, we are looking extremely bullish here on the higher time frames. I have created here an Elliott wave count. So just if you don't know what an Elliott wave count is, I'm gonna explain it to you real quick. You have here an expansion wave, that is your wave 1. You have a corrective wave, wave 2, and then you have the biggest wave, wave 3, where you have the highest gain in that A wave count. Then you have a fourth correction. So here number 4 is the second correction wave, and then you have a blow off top. So that is your fifth wave. And the fifth wave is usually slightly higher than the third one. So here we failed to do that, but it's still a fifth wave. Then from the fifth wave, you get a correction wave, and that is your ABC wave that you get. And once we are at the C level, we're starting another 1, 2, 3, 4, 5 count. Now, in that count, we are, in my opinion, at the second corrective wave, and the 4 is here at this candle that we created 2 days ago. And we are now on our way to the final wave 5, to go into the upside. So that we are actually in the fifth wave will be confirmed once we are closing a daily candle above $70,100 approximately. But I know, guys, I know you want to know where should you enter now to catch the fifth wave. I will tell you, from a trading perspective, the fifth wave is the riskiest wave in my opinion. It is also the worst wave to try to catch. It doesn't mean you cannot catch that wave, but it is statistically the worst wave to catch with the first one, actually. So the best points, once you have them found on the chart, is the second wave, the low point of the second wave, because that gives you the best entry, because you could have entered here to catch the third wave and get out on the third wave. So you would have done that potentially here. And then the next best opportunity would have been at the bottom of the fourth wave. The problem, so yeah, it's not really a problem. So if you think you are in an Elliott wave count, once you have 1, 2, 3, to find the 4 is not that hard anymore, but you might have to try 2, 3 times to get the right bottom of the 4 before we start moving up here again. So, but again, if you want to trade an Elliott wave count less risky, you would wait here for that horizontal level to break, and then catch the rest of the fifth wave. Again, that is the worst wave to catch because you don't know how high it goes. Here's a lot of resistance above us, so it could also be a failed wave again and slam us down earlier already. So that's why I don't usually like to trade 5 waves. If I'm in this, if I get in at the second wave, it happens sometimes, and I'm here at the bottom of the second wave, get in there, then yes, then I can hold this all the way to the fifth wave. Even if the fifth wave fails to complete the fifth wave, that means it doesn't get higher than the third one. So, and it goes, let's say it just goes here to 71. Okay, 71, I got in at 61, so that's fine, you know. So, but getting in, let's say here, at 70,500, and then we have a failed fifth wave to 72, and you held all this time this position from almost for a month, for like a $1,500 move. Not really interesting, guys, you know. So that's why in terms of like investment entries, a fifth wave is really bad, you know. If you want to scalp, day trade the fifth wave, yes, no problem, that's something that you can do. So now in terms of our corrective wave, the fourth wave, we are still in that correction. Now 92 days, we're getting close to the 102 point here, 102 days. There's 10 days left. Again, I believe that we are going to leave that really soon. We don't have to wait a long time anymore that we are breaking out of that, especially with the inverse head and shoulders forming here, left shoulder, head, and here now potentially completing the right shoulder. Here's your neckline at $72,000 approximately. Once we are breaking that level, getting a 4-hourly or daily close above that, then you know, okay, the neckline is broken. We are off to the races in direction of $87,000, I believe. Yeah, roughly $87,000 is the target of that inverse head and shoulders pattern. Now, for the time being, we're above the previous week low. That is a level that we need to hold here over the next couple of days. I'm not concerned in terms of do we go a little bit lower? Do we go a little bit higher? It does not matter, guys. What matters is that we are holding key levels like the previous weekly low here to open new positions. So once we are Sunday evening around midnight, still at the same level, that is where I want to open a new Bitcoin position. So unless we are breaking above $68,500 and close to 4-hourly candle above that, then I would also enter there. But only then, guys, you know. So or we are coming back to the downside and get really lucky and step into 66,400 to 65,100 here into this pocket. That is the other area where I would be looking for investment entries right now, or even short-term trades on Bitcoin. And guys, don't forget, there is still a massive giveaway that I have with Bybit. You can make $1,000. The only thing that you need to do is create an account on Bybit with the link down below, deposit $100. Everybody should have $100, guys. And then subscribe to the channel and activate the notifications so that when I announce you, that you are seeing immediately that you have won. So you have to watch the video because it will be totally random that week that I'm gonna pick one of you guys, and you are only eligible for it if you are subscribed to the channel, have the notifications on, deposit $100 and sign up with my link on Bybit. You know, deposit there $100 and open at least one trade, guys. You know, one trade can be $1 trade, doesn't matter. You know, and you can also hop in out. You know, doesn't matter. 10 seconds in the trade, in, out, finish, done. You know, doesn't matter. That I don't know if you can make anywhere easier $1,000 because we're not a lot of people. You know, your chances are higher than any lottery, you know, to win here $1,000 every single week. So take advantage of that, guys. Now, in terms of the order book, that is also something that I wanted to have a look here today. Let's see. Actually, I see here on the 5 minutes chart already, you know, so if we flip here that current level, Bitcoin should send you a little bit back to the upside, guys, honestly, you know, so we should definitely go up here a little bit more. Let me see if I can zoom this thing here in a way that it's not going crazy on me. So you see here on this order book heat map, the biggest resistance is at $72,000, slightly above that. There's another one around $69,000, just slightly beneath. And the biggest support levels are here 65 and below, all the way down to like $63,000. So there's a huge order block in terms of spot bits, and also around 66 to 67. I guess that is also the reason why we see here Bitcoin, even today, slightly rallying back to the upside after that round trip that we did yesterday. I want to see Bitcoin going higher. I want to see Bitcoin today above 68,400 to be more or less in a safe spot, you know, in terms of directional move here for Bitcoin. When we're looking at the leverage that was in the market, so yesterday everybody got punished, guys. Everybody, you know. So first, all the shorts got liquidated. So we saw here a lot of longs coming in, and then we round tripped and all the shorts came back that got liquidated here. So now we basically wait for the same scenario to rinse and repeat, you know. So you see here, leverage is not as much as back as we saw that over here. So the leverage, the short traders got a little bit more risk, less risky with taking positions here because they are not trusting this right now, you know, and they have all the right to not trusting this because once again the market digests the information from yesterday, we are going to send to the upside. It's just a matter of time, you know. I'm gonna show you in a second something else which is also pointing to that. So then the short to long ratio also here, more people are neutral than yesterday. Also, that is a 1% increase. And when we are going then here to our liquidation levels, you see below us, we cleaned everything in over leveraged positions, the same what we saw yesterday. And only to the upside, we have over leveraged positions, and they are all shorts. So here, like I said, we are sitting here on a ticking time bomb, and it's just a question of a couple of hours until we see here a move into these levels, all the way up to like $71,400 approximately, and liquidate everybody there. So we are holding on to the 200 moving average on this chart as long as we are above that. No reason to be concerned for the time being. Once price action breaks below that, closes 2-3 candles below that, that is when you should get ready that we potentially try to break here into these long liquidation pockets to take out here some liquidity. But for the time being, it doesn't actually look like that. On the liquidation heat map, also here, clear support and resistance levels above us. So here you see we are starting to eat our way into the short liquidation levels here. The hottest one is around the hottest, that is the closest one, $69,200 for the moment, and afterwards almost $70,000 on the for the last 24 hours. But when we go to a monthly chart, then you see here that for the moment, just above us here at $70,200 to $71,000, there we would trigger a new short squeeze if we reach that level and close a 1 hourly candle, potentially even a 30 minutes candle above that level. Then we start to trigger a new short squeeze to the upside in direction of $72,000. And below us, we would need to break below $66,000 to trigger long liquidations. On the Bitcoin dominance chart, there we are seeing something that we definitely are not happy with, and that is dominance breaking here above the 55.6% level. That can go as high as 56% in my opinion. I give the Bitcoin dominance a buffer here for the time, and I want to see from here a bigger rejection to the downside. The same what we saw yesterday. Yesterday was really nice. We saw a rejection here to the downside. Altcoins were doing well, even though Bitcoin was retracing, like for example Injective 20% up yesterday. And I wanted to show you something else here on the Bitcoin chart, because this applies to most of the altcoins right now. So here for Bitcoin, it's not really applying right now unless I go, I think, to a 12-hourly time frame. Here on the Bitcoin chart, we are really close to the bottom of the stochastic RSI. There is only today left to touch the bottom. And when you are so close to the bottom on a stochastic RSI, that is the moment where you want to open positions. I have learned my lessons, guys, so I have sometimes opened positions like here or there, and I had to take a lot of risk to catch here the last drops of the move here, so I am, so I did not catch a lot of that move here. But if I would have opened a position down here, and that would have been somewhere here, and I would have waited until we reach here the tops of the stochastic RSI, I would have done so much better. Look at this big move here compared to this one. So that's what I'm doing right now. So I start opening positions only when the stochastic on the daily hits the bottom, and get out when we are hitting the tops. I'm not waiting a day or two. When we are here at the top section, I just close my positions, guys. So the trading positions, not my investment positions, to be clear here. So that is something that I've learned over the last, yes, I would say 3 months, guys. 3 months. But anyway, altcoins will do well here. Let's have a look here at the USDT dominance. The USDT dominance is getting rejected to the downside. Again, this inflicting point is a point that we don't want to break to the upside. If we would do so, that would be really bearish for the whole market. For now, we are still getting rejected from there. I want to see a candle close at least the way that we are looking right now, or a proper rejection to the downside. But for that, we need some relief in the market that is actually going to happen. Now let's talk about some altcoins that are really strong even during this corrective phase here. One of them is Kasper. Kasper is really strong here. I'm looking for a potential entry if we maybe come back down into the green box here. If we are not coming back down here, then my next entry level will be here just above us. Let me make this white for the time being at 17 cents, 0.5. That is my next level of entry, roughly 2.5% above the current price. And why would I enter there? Because here is massive resistance. You see here all these wicks, the deviation that we had here. Here also a lot of wicks, deviation up here initially when we came up. So I want to see a 4-hourly close above that level. Then I'm going to enter that. And the stochastic RSI and the MACD are telling me that is the right entry, because the stochastic wants to bounce back to the upside. The MACD will follow suit and will also bounce with the trend line, with the signal line of the trend line. And then we get continuation to the upside into the 20-cent level and potentially higher. So here you can make really easy, potentially 15%, I would say roughly, almost 14%, guys, 14% on that trade here. So again, the white line is my entry. My stop loss is here on the previous day's candle close at 16 cents. So that might be quite steep from current prices. So look at this. So that is a 6% move to the downside. You have to decide for yourself if you want to put leverage on that or if you want to trade that spot. It makes both sense depending on how much leverage you are going to use. The other one is RNDR, also quite strong, still holding on here in the middle of the lower range. Here I also believe we're going to see a really big pop here pretty soon. And for that, you have to zoom out. I have to show that to you here on the weekly chart. On the weekly chart, we're at the bottom range of the stochastic RSI. And when you go then and draw a fib retracement tool from top to bottom, then you see that we are just right now here in the golden ratio. And that is a good entry point for long-term positions. So if you plan to have an investment entry on RNDR on leverage, that is your point of entry. You want potentially, if you want to be really safe here, wait for the weekly close to get confirmation that that the price maintained to stay in the golden ratio, unless we are starting to move here up again above $9. Then I would take a chance, guys. I would take a chance. The level that I would be looking at for taking profit would be here the $13.62 level. That would be the first bigger level on an investment entry where I would look for taking profits. On a trading, if I would just trade this, then the higher range here at $12 would be my final target. Then Ondo is also holding up really strong here, bouncing off the downward sloping trend line that has now turned into support, was prior resistance. We got rejected from the resistance area. Remember, guys, I told you that this is resistance here. We need to be a little bit careful around that level. I mentioned that. But here the bounce of the downward sloping trend line, that gives you great opportunities for a potential entry. We might get one more move here down. Yeah, if you want to get in $1.26, $1.27, you might get one more chance to do so. And if we don't get that, then around $1.31 would be my next entry level. If we move first higher than lower, guys. And then again, the targets remain the same. What I had said the other day, $1.46, $1.47 is what we're looking at. Then Injective, like I said, Injective really strong here. We are even about to flip the EMA ribbon back into an uptrend. The only problem that I have with the daily chart on Injective is that we got a sell signal because of the move today to the downside, and the RSI is also pointing to the downside. Once that is reversing and the stochastic comes a little bit lower, no matter what the price does, I will be starting to looking into to open another injective position. So there's two ways how I would approach that. Either we come down to like $29 once again, and I enter from there, or we are getting a green candle above the downward sloping trend line of the Fibonacci extension levels at $31.30 approximately, and open from there a position. So these are the two levels that I'm looking at for opening a position. If we get here up here an entry, then the green zone becomes my stop loss. If we go back into the green box, then slightly under the EMA ribbon would be my stop loss, around $26. So just that you know, again, investment entries, guys, investment entries, because there's a 10% stop loss. But I'm targeting $40 and above, so that is a a 50, well, how much is that? From if we would get in here, so yeah, a 44% move to the upside, more or less, so it is worth it, to take these kind of positions. And guys, that's it already for today's episode. I hope you enjoyed it. Make sure that you subscribe to this channel if you liked what you have seen, and also activate the notification bell. And I'm gonna see you then again tomorrow.